Hey everyone, how you doing today? We're with Matt, the mortgage guy, and we're on to topic number 2. This was mentioned at the tail end of topic number 1, and this is about an exciting new jumbo product. The jumbo market is back. We're going to hear more about this new program because for a while now it's been hard to get jumbo loans, a little more expensive. Not everybody wanted to do them, but now there's some product out there. So Matt, how you doing?
I'm doing great, Mike. How you doing?
I'm doing well. So what do you got? This is exciting and new
I'm
information.
I'm excited because you know me, and anybody who follows your channel or contacts me about any mortgage product knows that if I don't have the best product, I'll tell them. And literally for the last year or so, if you've got a relationship with a big bank, they're most likely your best spot for a jumbo loan. Well, here we are, March 17th, 2021. Things have changed. United Wholesale Mortgage, who's the biggest wholesale lender on the wholesale side, came out with their own product, which they can do. They're public and they got billions of dollars now. And it's called Prime Jumbo. You can go up to 90% on a purchase. You can go up to 90% on a refinance. And what they're going to do, which is really kind of a game changer for the jumbo market, is they're just going to underwrite to desktop underwriter, which is how we, put through our system to see what qualifies approved eligible on a conventional loan for the jumbo stuff with very minimal overlays. And overlays for anybody watching is just extra rules. On a jumbo, you might need 2 appraisals. You might have a lower debt to income ratio. You might need 12 months of reserves, all these extra things, which makes sense because jumbo loans are bigger and they're more risky. So there's going to be more rules. They're going to have less rules to follow. And they're going to have, a 680 minimum credit score. It's just going to be more flexible. And in the video that I have on my channel coming out today, I talk about it's not the only game in town. And I'm not saying that now wholesale brokers are the only and best place to get jumbo. Jumbo, for all intents and purposes, kind of opened back up. Where 2021, it was non-QM loans and jumbo loans that really got restricted the most. A couple areas where they're higher risk loans, there was doors shut, there was guidelines, restricted. It got really tight lending wise. That's starting to open back up, and exciting for the brokers in mortgage that United Wholesale Mortgage has come out with a really cool product. I know personally, and most parts of California, if you're listening in other parts of the country, this might not pertain to you, but in Sacramento and surrounding, home prices have gone up, and it's not, crazy to think about $800,000, $900,000 price points, but still my max high balance loan can only go to $598,000. And so with this product, you can buy an $800,000 house. You can put 10% down. There's no mortgage insurance. And, the guidelines aren't, super restrictive. For the 10% down stuff, you do have to have a 740 credit score. So it's not like, it's the Wild West and you can have, challenge credit and low down payment and all that other stuff. But it's way more flexible than anything you'll find at the bank. The pricing is great and all that stuff. So I'm excited about it. I'm excited because I've got a lot of, entry level Bay Area buyers are buying stuff 1 to 1.2, at least the ones that come to me. And I literally have a couple in contract right now that, that specific buyer doesn't have $250,000 to put 20% down. They've got a good 6-figure income. They're a young couple that's working hard, and maybe they have a gift from mom and dad, but putting down 20% on 1.2 is 240 plus closing costs plus reserves. They just don't have 300,000 in the bank. But when you show them that you can do 10% down plus closing costs, and now we're talking, with reserves even under 150, now they're in the game. Now they can at least play. And the cool part is the no mortgage insurance piece, and the pricing is competitive. So it's a really good product. And I'm excited about it. Literally came out today. And so this morning at 6 a.m., I'm on the website pricing it. And I've got in my system loans that I've tagged jumbo, where I talked to him in January, February, and I knew it was coming. And I said, let me call you back in March if there's a product available for you. And so, yeah, it's exciting. It's good stuff.
So a couple of things to just make people realize. First off, the word jumbo, that's basically a price point in different regions. Like I think you said in Sacramento, it's $598. I think in other parts of California, it might be like $644 or something of that nature. Basically,
yeah, in your fancy town, in a lot of the Bay Area counties, it's 822 375.
822. Okay.
Yeah.
So basically there's a cap on what, again, to go back to episode 1, and Fannie Mae would buy, right? They want to buy
Right.
under jumbo. So the fact that there is now a new product, a new entrant, that's good news. You can go bigger. But also what I've seen historically is once somebody's a first mover, others will follow. And then there'll be competition for products like this. Is that fair to think about?
100%. And literally the president of UWM, whenever he does anything like this, says that this is going to be good. This is going to be good for the wholesale channel, because when I do this, others to compete are going to come out with their own stuff. And maybe that's, and he's an abundance mentality type of guy where, I'll say it too. I'm not the only game in town, and UWM or the wholesale channel is not the only place to get loans. When they make new, innovative, good products, other people come out with products, and it's just the consumer's the winner. The consumer, one that has more things to choose from and better products available. So it's part of the, re-unveiling of jumbo. I think jumbo got super restrictive, and for good reason. In 2020, it was harder to get a jumbo loan.
Yeah.
But those that are creating products and rolling this stuff out are bullish, I guess, on the jumbo moving forward. And so there's
very cool
products available. Yeah.
So next question I have for you, just to get kind of clarity. So you said good pricing. When I hear that, I think rates and points and stuff like that. On a rate level, right? Assuming the highest qualified person on a jumbo loan versus somebody that's under jumbo, same person, just a different amount. Is the jumbo loan a quarter point more, a half point more? Is there kind of a risk premium for size, or are they equal with this new product?
Yeah, I was poking around, and I haven't had a ton of time to poke around like 680, 720, 740. But in general, low threes on a jumbo loan, which is competitive. I think that's probably in line, slightly higher the conforming stuff. Where I really think this is a differentiator, and where I think that I personally am going to get a lot of business, is that 10% down space,
right? Where
you can get 3.25 to 3.5 with 10% down and no mortgage insurance.
Yeah, no PMI is a big deal.
Yeah, I mean, on an $800,000 loan, if you go down to the high balance stuff and you've got 10% down and you're paying $400, $500, $600 a month in MI, wiping that out and maybe paying a slightly higher rate is incredible. Yeah, because I looked high and low for 10% down jumbo, because I had clients last year that just said, I don't have 20%. And what I found was just horrendous.
Mm-hmm.
I think I found stuff that was, I shouldn't call any lenders by name, but mid fours.
not for this.
right. Yeah. Mid 4%. And, I guess historically it's not the worst thing in the world, but it made you, as an advisor, step back and say, okay, maybe this isn't the best bet for you if you can buy something for a little bit cheaper and, get something around 3% versus you really want to buy in the jumbo market, put 10% down and have something in the mid fours. So this is drastically better. I'm excited about it.
Yeah. So I guess, damn, dude, there's a couple of things that kind of jump out at my mind living in that world where a lot of the real estate's jumbo. Mm-hmm. We already have no inventory. Right. One of the stuff that was really selling now and getting overbid were people that were paying cash. Right. So, they were the winner, right? Given lack of inventory. Now what we're doing is we're springing potentially more demand. I mean, in theory, right? More people will qualify with 10% down in these markets. This product, assuming it sticks, and I'm sure it will, it really could add some fuel to the owner occupied market in jumbo markets like where I live.
And I think too, right? You think about like different markets, and like I think the 800 to 1.5 or whatever it is, where there's probably more people getting loans. I think when you get super expensive, it's just like $5 million house is a tech entrepreneur or something, a tech founder. But I think you're exactly right, and so it is. I think it's going to impact that market more than some people think. I talked to a client of mine who said, we're writing offers. And it was interesting because we've got this dynamic right now where you're writing an offer, the house isn't going to appraise, and everybody knows it, but you're just willing to pay more. And that's, each person's can do whatever the heck they want.
Yeah.
It was listed at 960. They're going to offer 1.2. And the problem was, he said, at 1.2, I barely have 20%. If it appraises at 1.1 or 1.125, I don't have enough to bridge that appraisal gap.
Right.
So by having 10% down, if it appraises light, now I can come in with that extra, which, take that for what it is.
Oh, that's just whack. That's scary. But yeah, I understand. Ugh.
Right. It's like, I've got 260 total in reserves. So if I do 10% down, then I have the extra money because I know that I'm paying 75, 100,000 more this thing will appraise for.
So I just want to run people through the math because they're probably not keeping up. So a house listed for 960, the buyer's got 250, 260 in reserves. They're going to bid 1.2, hoping it appraises at 1.1. Why 1.1? Because again, a 10% down means they're going to bring 110 to the table. The lender will bring the other. And then they have to bring in the 150, which was over appraisal. They have to bring in all of that. So that's how you get to 260K. That is frightening.
It is. I'm not going to lie. It is. Scares the heck out of me.
Oh my God. California, Silicon Valley, you guys are nuts with pricing. So any closing thoughts on our 2 interviews? These have been great topics today.
No, but just everybody knows how to get a hold of me, Matt at mattthemortgageguy.com. I don't think anybody slipped through the cracks. I get back to folks, whether you're in California or not. If I can refer you to a broker out of state, I appreciate all the great one rental at a time. I've gotten such cool feedback about, I love the segment on Wednesdays. I love following you guys. And so I'm happy to help anybody, even if we're not doing business. If it's just a question about, I closed on this one 3 months ago. I have a question on, what I should do in the future, or I'm thinking about buying something 6 months from now. I'm happy to answer all that. The best way to do it so it doesn't get lost, because if you call and leave me a message like happened last week, I might find it 7 days later in my voicemail box. So Matt, M-A-T-T at mattthemortgageguy.com. I promise you I'm doing my best to keep up. And I got 5, support staff that are going to help make sure none of the emails fall through the cracks.
Very cool, buddy. Thank you for doing this every Wednesday. I look forward to next week.
Cool. Thanks, Mike.